Welcome to the Tokenomics DAO podcast, where we explore everything tokenomics related, ranging from deep dives on the tokenomics of the newest protocol to demystifying the nuance of building a successful token ecosystem. Our goal is to bring awareness to the importance of tokenomics and the crucial role it plays in defining the success of a protocol, helping make tokenomics relevant for everyone, builders and investors alike. I'm your host, Flo, joined by my co-hosts Jason and or Lovis. Welcome to the podcast.
In today's episode, Flo and I are talking about the idea of tokenized real estate and if there is a solution, a Web3 native solution to kind of owning a portfolio of properties in like cool destinations to enable a nomad lifestyle. Maybe it's just vacationing, maybe it is working in beautiful places. And somehow, since we're tokenomics, start trying to think through how the tokenomics work out for that. One piece that Flo has written about that was from Citadel, who have successfully or are in the process, but also developing the model to tokenize real estate. We discussed kind of the dynamics of the real estate market, that most normal people are like completely priced out of owning property, and trying to figure out if token ecosystems have a solution for that. We discussed different other timeshare models for having access to vacation rentals or medium-term stay rentals. And we thought through Airbnb a little bit and to see if there is value in kind of creating a decentralized version of Airbnb and kind of what the levels of decentralization are for that. And then, of course, also we talked about, well, what if it's just a small community thing where basically people that know each other end up sharing the places they already own and say, hey, I'm in Germany, you're in Brazil, let's swap for a couple of weeks, So yeah, these are kind of all the things that were kind of thought through. And I hope you enjoy listening to our conversation. I just got back from vacation and
Nice.
enjoyed my time there very much. And I thought, why can I not partially own a piece of property in a beautiful location, be invested in it, right? So I reap the benefits of renting it out short or medium term. But it is available to me at maybe a preferred rate, or anyway, maybe not even a preferred rate, but maybe it's just a place that, I know and I'm familiar with, and I can stay there. Also kind of be a digital nomad, maybe stay in Spain 3 months out of the year, maybe have a place in the US where I can stay 2 or 3 months out of the year. And, there's so many beautiful places in the world. Why do I have to just have like one home? And so, having said that, I do have a wife and a child, so that makes the stakes of traveling nomad style a little bit harder. And so obviously they would always come with. But so being into tokenomics, I'm thinking, well, is there maybe a solution for like a token-based, like community-owned, decentralized version of Airbnb? And then I think that is something that Flo and I had talked about before, because we're like, yeah, really. So like my wife is American, I'm German, we live in Germany, but we spend a lot of time in the US. Flo is German, but he lives in Australia. Family is in Germany though. So like there's always a push or a pull to be in kind of like at least two places at once. But like, how do you maintain a home in both? It's incredibly expensive. And then it makes also like even like personal taxes and stuff super complicated. So like, so that's kind of the idea for today. We want to brainstorm on that and just see if we can come up with an idea to make that happen Web3 style.
Yeah. Yeah, I found that like super intriguing. The story would just be, I'm going to Germany now, and I'm gonna stay at my parents' house, right?
Yeah.
Or at my wife's parents' house. But we don't have our own home base where we can just go and I'll have a desk and all that kind of stuff, and
Right.
you can just work from there. So we could even stay a bit longer than we're staying for a month now, but we could even stay a bit longer than. And on the other side, wouldn't it be cool if you like if I left here and I could like sublet that to someone else at the same time, right? So the properties are both like rented out. So I think the idea that we had was sort of, what if you had like a group of people, and I don't know if you need a token for that, but like let's say you had a group of people that would live across the globe, or in different locations at least, and they would all sort of pool their properties, and you could see which one would be available, or when someone from a certain property would like to leave, and then you could arrange your travel on that. And if I guess like if the pool is big enough, then you always find opportunities to just go into a different house. And yeah, you could use Airbnb, I guess, but like I think like Airbnbs are, I mean, if you'd rent out your place at the same time, you can kind of pay for the costs on the other side, so you wouldn't really make a loss with that.
Yeah.
So maybe if you rent out your own place, then Airbnb could be a viable option. I don't know.
Yeah, that's true,
But
but it's the Airbnb is of course a good option. I've used them, well, I mean, tons of places. We've stayed in over, I think, 40 or 50 Airbnb locations across the world. But the pandemic, for example, had a huge impact on it, because of, you know, a lot of people that did short-term rentals went to long-term because there was so little traveling.
yeah,
So right now, I actually just read this morning, the guy who does the Nomad list, he was saying that prices have, like right now, prices are sky high because there's less supply and huge demand. But it's mostly from like vacationers. It's not really digital nomads so much. But of course, we're going into summer season in Europe, right? So things are escalating over here price-wise. So, but of course, but then, so that's one thing. But then also, if you stay somewhere, you know, see, even if you find a decent place that's big enough for a small family where you could still work while you're there, so that means you kind of need almost like an extra room. Then you're still, even if it's cheap, you're looking at $100, 150 a night. So that's like more than 3,000 a month, right? That's a lot for, that's a lot for anyone, I think.
It's only a lot if you can't rent out your own place, right? So if you can get 100 or 150 a night for your place, then it's not really, because then it would be sort of circular, right? Everybody would be spending with the other and paying their rent or their where you would get the same income. So yeah, like a zero sum. Is it a zero sum game? I don't know. It would be like this at least circular thing, right?
Like an even exchange.
Yeah.
So I live in a small town, so we do have a really nice place, but small town away from everywhere. So it's like, how do I get people excited about staying here? But then maybe
it's quiet, maybe. Yeah,
it is quiet. It's quiet. It's quaint.
Yeah.
But so I was thinking more about, okay, how could I? Well, so like the pooling for sure is a good idea, and there's probably a model for that, because you could do reputation, right? Like on-chain reputation could help qualifying people who kind of like get to use this, make it maybe a little exclusive, like not in terms that people need to be wealthy or anything, but you do need to be sure that if you're swapping houses, that when you come back, all your TVs aren't missing or something like that.
The house is still there. Yeah.
So I mean, similar problems that Airbnb has already solved, right? Like you do reviews and you do maybe there's a deposit system. Maybe you could lock up some ETH or some Bitcoin for kind of like as a security deposit in a smart contract. But then the other thing is
you're just building a decentralized Airbnb, right?
Yeah.
Okay. Yeah.
The kind of more decentralized Airbnb. So I guess that gives you opportunity, because Airbnb does also take some pretty good fees. It gives it opportunity to share that around maybe with the community. So that's nice. But then another thing is, of course, these like short or midterm rental properties, they produce pretty good yield, right? So they're pretty good investments as far as you know, the current investment world goes. I mean, it's, of course, it's not like crypto gains. But overall, I mean, many people that I know that invest in real estate, of course, there's ups and downs, but on average, I think they do pretty well financially.
Yeah.
So that is also a thing that fascinates me. And I did buy a small place in Germany that I invested in that's rented out. But so like, what is like the opportunity there? Like, could it be a way to like raise funds from a bigger pool, put that money to work, investing in these like medium term stay rental properties and share back? Like, obviously then you rent them out, right? You have a company managing them because sheets need to get washed and stuff needs to be cleaned and blah blah blah. But you could probably pay back a yield to the investors. I would, like, just rough estimate, I would say probably 5 to 8% per year or something shouldn't be a problem. And then you could, as an investor, maybe still get perks. Like, so maybe when you want to stay somewhere, you get a discounted rate. But then of course you have to keep in the back of your head, well, while I'm staying there, it's not earning as much as it could. So you also have a natural incentive for investors to not go and just stay in the prime locations all the time.
That's true.
I mean, at the end of the day, the real estate game is just access to capital, right? If you can get money from a bank or raise money somehow, then it opens up the playing field. So that's just the thing that I'm thinking through. Like, obviously don't have millions sitting around that need to be invested. So it's just like, well, is there a way to create like a cool, profitable, like a win-win-win situation, for investors, for people that like to travel?
I guess it's like two problems, right? It's this, on the one side, it's this investment problem of real estate, that if you want to invest in real estate, it's unless you buy like a REIT, a real estate investment trust, like an index fund of real estate, so to say, unless you buy that, it's really hard to get small exposure. Right? I wrote about this in the Citadel piece, right? So here, where I live in Sydney, I live at the beach, and the property prices here are like crazy. Like a 2-bedroom costs like 1.5 million Australian dollars. If it's like close to the beach. So locations, of course, is everything. And if you'd buy that and you're not rich, then you have a lot of your capital allocated in that one place, right? You can't diversify a lot. And so that's for me is the one problem that could be solved. And I think Citadel does that in a nice way. Not that they're buying like beachfront or like nice location properties, pool, but they're was like a shopping mall somewhere, and then people could pool in, like commit funds to a pool, and if the threshold amount was reached, then they would have bought together this property. And then Citadel, they would have created a special purpose vehicle that would buy the property and then create an NFT based on that property, right? So they really bring that property on chain then, and would split that NFT up into tokens that then can be distributed based on the amount that has been invested. So I could, instead of having to fork out or go into debt for this 1.5 million to buy this nice property, I could only invest 10,000, 50,000, maybe 100,000, something much smaller than that. Just depending on my appetite, risk appetite, my portfolio, and the amount of money that I have. And you could kind of buy into that in that way. So that's, I guess, this one problem. And I think this is something that's super interesting. And that's why I find Citadel so cool, like this whole concept, because it opens up this whole new world for just normal investors. And then the other problem is, I guess, is this, how do you, this whole Airbnb thing, right? I mean, Citadel in a way also had suggested a solution for that. So I think I don't think they've solved it or implemented it in any way, but they said that if you're an owner of a token of a property, that gives you specific rights to that property. So you could use the common areas. You could maybe even rent a place there, paid by the yield or something from these tokens, right? So they had some interesting ideas in that regard.
Oh, that's cool. I love that. So that means if you get to maybe a critical, so let's assume 8% yield, which is maybe high, maybe low. I don't know. It's just a number, right? But let's assume that, and say you invest $100,000, then your yield would be 8,000 a year, and you could probably, I don't know, you could probably rent a space. I guess in the case of Citadel, that it's commercial, so maybe you could rent like a small shop or a small office, and
like a desk
actually,
in a shared office.
You guess you don't really even get a discount. You're just applying your yield to directly pay the bill in a way. But I really like that. That's really cool, because it means if you make it to a certain amount of money, then after that it's like rent free. You're kind of, like it pays for itself. So that's a really cool idea, I think.
And maybe you could even apply that to the holiday homes. I don't know. So let's say you get a yield on this property here, and you that pays you something. And so because it is always like rented out, you get a certain yield from that. And then you can direct your portion of that yield to renting it out a couple of weeks a year without paying for that. I haven't really thought this through completely, but it like
seems
at the moment it sounds kind of interesting and maybe even doable. It'd be interesting to know from them. Maybe I'll reach out again to them, to Citadel, and see, because in the beginning, or one of the constraints that they had right from the get-go was only commercial. So, but I haven't really asked why they do only commercial. But that would be interesting to see, right? If they,
Well, so one problem that I see for sure, like the process that they describe, I think takes time. So, they have to do all the due diligence on the property and then basically create it for the Web3 investors kind of as a proposal and say, hey, invest in this, and then we'll go and buy it. But with the market right now for like, I guess retail or like non-commercial, like residential real estate, is you don't even have time for any of that. Like people buy I think it's starting to slow down right now, but from what I've heard, people pay 10-20% above asking price, and stuff is only listed for a couple of weeks and it's gone immediately. So that would be kind of the challenge.
Here anymore.
No
price. I heard prices are falling in Sydney, Melbourne, and Australia at least. But I'm sure so the government's going to step in on that, because that is the Australian dream, property prices and that. So they will not let that fail, I think.
Well,
or go down too much.
There's a big gap between all-time high and failing, though. So
I saw these charts. It was like crazy. I think they had like 50 years or so of real estate prices and growing wages, and it was like wages like flat, slightly going up, and real estate was like almost hockey stick.
So then so maybe there's also an ethical concern, right? So maybe doing this the solution we're thinking about maybe would open up even more capital into the real estate market, which might make just like normal living even more expensive. So that's not ideal, but
it might. But like, I want to get in on the party, right? Exactly. Like, I don't only want the rich people to profit because they can afford.
It's definitely an upper like 10% game right now. I think that not really anybody else has access. And that's true. So then the tide would lift more boats then that way, at least. So then it does share the wealth, right? Rather than locking it in with the top. And then the other thing
would increase demand. Yes, I agree.
Well, would there be any so another model? So is there any way that you could leverage token ecosystems so that I can transform myself from a rent payer to an owner somehow? You know what I mean? So
I thought about that too. I mean, what if you like tokenized a piece of real estate, like in this case, right? So you had, like, let's say Citadel would like, they would buy the place I live in, right? And I think it's a great place, but I can't afford it right now. So I just pay like rent for that place. But I'd slowly over time put my savings into buying tokens for this place, right?
Yeah.
I like, without going into debt, I could then over time amass more and more ownership over this place. And so by that, after so you could live in the place, and over time you could maybe buy this place like piece by piece. I think like the only advantage would really be you could do it without
bank
going to debt, right? Borrowing any money for it.
Well, but somebody borrowed money, right? Like investors bought it. I mean,
yeah,
Citadel, so to say, borrowed money from investors, I guess you could say, but not really.
Yeah.
It's a different contract, but
the investors might have borrowed money, right? Or they might had it. They might had it from somewhere and then just invested into it, and then I'm basically the one paying the yield, right? With my rent is the yield for that investment.
Yeah.
But then since it's tokens and I can buy like piece by piece, so maybe I'll get my bonus, or something really works out well, I can take that and I can just put it into and buy some tokens. And then after some time, I might be become the owner of the place.
Yeah, that is really compelling, but you still have to add money on top of the rent that you're paying, right? So there's no,
for a certain time, because the more owner you are, the more of your own yield you get, right?
Will pay. That's true. The more that your yield will help you cover that.
So if you got 50% and you pay $700 a week, you get 350 back of the yield, right? So
yeah, minus maintenance costs and stuff, of course, but
yeah.
Maintaining properties costs more than people think.
Yeah, that's true. Yeah.
But but generally speaking, that's a cool, I think that's a really compelling idea.
Because then you could do it at your own time in your own terms, right? Without
well, so the Web3 investors could become like your token holders could become your bank, essentially, rather than having to go and get a mortgage. In which case often your job is kind of your single point of failure for the whole mortgage deal, right? So if you qualify or not usually just depends on your income and your other assets, right? It's always like, oh, you can't buy this, you don't already have assets. And like, well, how am I supposed to ever get any assets if I can't buy this? So
this is an asset and I would like to have it.
Yeah, that's always the conundrum, right? So but I like that. But then, so there was just a thought that popped into my head. Somebody posted on Twitter. It's like, how come when your like debt to equity ratio, when your trading goes below a threshold, there's a margin call and they take all your equity? How come that doesn't exist for mortgages, right? Because like, so say you take $1 million mortgage to buy a home that's valued that at the time, but then the value of the home drops to 500,000. You're still paying that $1 million mortgage, right? Because the bank lent you that money and you gave it to the seller. But they're not going to margin call you as long as you keep paying your mortgage payments, right? They're not going to take the house based on the equity of the house being worth less.
Are they? Because I mean, like the house is a collateral, and I think that's similar to what like MakerDAO with issuing DAI does, right? So if the ETH that backs the DAI goes down, then you got to post more collateral. So if the value of your house goes down, then the bank will reassess their finances and say like, oh shit, if this guy stops paying, then we need more collateral for that place, because we can't sell it for the million that we loaned this amount for, right? So we need to get more. So I think there is something like a margin call in that case. Or I'm not I'm not super deep into this, but I'd say from the bank's perspective, that is doing that is really like issuing that mortgage, they would.
Yeah, so I think that's where the whole thing with like variable interest rates and stuff comes in, which of
Yeah.
course on one hand is just a it's just a money grab to get people into mortgages cheap and then crank up the rates on them later. But the other thing is, if there was a thing where they would have to reassess the value, it has then, and the value of the asset went down, their risk would have increased, and it makes sense that they would ask for more interest, right? It's like, well, you pay us more for us to be willing to take this risk. But I think, well, at least in the US, typically mortgage contracts, or in Germany, same, they don't have this margin call unless you stop paying your mortgage for a long time. Then of course they can take your home. Maybe in commercial real estate this is different, but in residential, at least, I think usually there's laws that don't allow that, because you don't want people to be on the street that have been paying their mortgage just because something happened in the market that they couldn't really control.
Yeah. But like from the bank perspective, that's then a lot of risk, right? If the properties all of a sudden go down 50%, and then someone stops paying their mortgage, they're screwed, right?
Well, so this is, I think,
down.
I think this is roughly what happened. This was roughly what happened, right, in 2008. I mean, you create kind of like a death spiral in a way, except for housing prices in that sense, because then once banks repossess hundreds and thousands of homes, then they're going to dump them on the market to try to sell them somehow, somewhere. So then that increases supply, which again hurts prices and stuff. And so then that's when the housing prices tank all the way. Curious to see how that plays out. I mean, I do think we're heading into a major recession right now, so I'm sure housing will play a role in it again.
I think so too.
Simply because prices have gone nothing but up since 2008, and at an aggressive rate. I mean, more than 10% per year, which is already in Germany. Normal people with regular jobs are completely priced out of the market. They cannot afford to buy anything. And
like, I mean, this chart that I talked about, I don't have it, and I can maybe look for it. It was on Twitter somewhere. But that just shows it all. It's just the cost of real estate in comparison to the wages you earn or the salaries you get. But so
anyway, so another thought that we've been talking about, like, jokingly, was where's Tokenomics DAO going to have flexible workspaces? And we were like, oh, he's like, totally Flo likes to surf, so we need one in Portugal on the coast, or
I think Crypto Baba would be down for that too. I mean, that could be cool as well. Maybe if this whole thing, I guess, like the thing that Citadel is implementing now is this whole legal structure behind it. And I think once they have tested that a couple of times, they've acquired a couple of real estate objects and tokenized them, then they could franchise it. And then they could say like, oh, okay, Tokenomics DAO, they want to buy a place. And so we put down the money to buy the place, right? Sort of like crowdfund it with the DAO and issue a token, and then we jointly own this place. That'd be cool as well, right? So you could have, and then the cool thing is you basically have this, you make real estate, you add liquidity, right? So I could get out if I don't like the place anymore. I can just sell it, my chunk, and somebody else could buy it. So it's a pretty cool model, I think. I think it's, and then DAOs cool.
DAOs can diversify the treasury, right?
Yeah.
Which, I mean, I'm obviously all for digital assets, but owning real estate or like owning real world assets is a smart diversification, right? And for a DAO to, especially if a DAO holds all their wealth, so to say, all the treasury just in their own token, that's typically a risk, in my opinion, right? Because you want to own at least, you want to be diversified, at least to Bitcoin and some stable coins. And so if you could have tokenized real estate, I think that would be super cool, especially if it then also becomes a perk for DAO members. Like, how cool is that, right?
Yeah.
It's like, hey, we're going to have a DAO retreat in Porto something, and like, yeah, you have to get there by yourself, but once we're there, we're going to hang out, we got room for 20 people or something. I don't know. It sounds like a really cool sounds like a cool idea anyway.
Yeah, because you can really like crowdfund it, right? Everybody could commit funds into something, and then that could work. I just actually checked the Citadel website, and the first IRO in March that failed. So they wanted to buy this shopping mall commercial building in Cardiff in the UK. I guess that was pretty boring. And now they've bought like a place in Singapore.
Nice.
So next time we can ask Jason if this is a nice place, if he knows it. But and it wasn't as expensive. It was only like 650,000, which don't show. I'm not sure what they bought, but it went through, right? So this is really the first one that they're doing where a token will be issued to the investors, so the people who committed their funds to it.
It's really cool.
Actually, really cool.
And then I assume when they commit funds, is it in ETH or is it in stables? Do you know?
Stable coins, yeah, it's USDC.
Okay.
Yeah.
Otherwise it's probably too risky for them.
Yeah. So I guess you kind of need that, and because that's how you're going to buy the place, right?
Yeah. But so if you had tons of ETH, you could always use them as collateral to get stable coins to then invest in real estate. Better not get a margin call on your ETH, but usually
that'd be a problem then.
Yeah.
Like not. Yeah. So I think it's a cool concept. But back to this whole holiday home thing. I'm just wondering, like, is this just a complete copy of Airbnb but decentralized? I mean, there are interesting aspects of it. I haven't really done any research if that exists, but generally, what could be cool is the fact that you just cut out the middleman, right? You cut out Airbnb, who is this platform, who just connects someone who wants to stay somewhere and someone who wants to rent out something, and they offer some mechanisms on the side. So I'm just wondering, like, why has nobody done that yet in a decentralized way? And I think I read something about Uber, why nobody's done that. It's like because, I'll have to think what that really was. It was like this, I think that Uber ensures with their home model that drivers are ready before people book them. So they actually actively regulate the supply of drivers so that it can meet the demand of people who want to be driven, because you're not going to use the app if you have to wait an hour to be going somewhere, right? So there's this mechanism, and that's what they described was difficult to replicate. So I don't know if
because you need the data, or is it a statistical analysis problem, or what is it?
I think it was more like upfronting the payment or something like that to the. Well, not really, right? Because drivers, they just get paid when they fulfill a job, right?
But maybe it's just because they know
maybe
when
it's
to
the
apply
data,
the search pricing and stuff.
Yeah.
So
when to apply the pricing, where to send them, maybe.
Search pricing, maybe where to send them. I have very little experience what it looks like from the driver side, but I had a friend who did it, or a couple of friends who did it in the US, but that was also a long time ago, so I don't know how it evolved. But what I do know is, of course, that like in certain countries, Uber supplies the drivers with the vehicles, which of course makes it but then then they're just like a glorified taxi company, high-tech taxi company. which then of course the taxi
yeah.
companies also adjust, right, and make
Yeah.
their own app, and they can also do well. But so
Oh,
back
yeah.
to the Airbnb. So I mean, there's multiple steps to decentralizing that, right? So the first is creating a decentralized or like a community-owned platform, let's just say, rather than Airbnb being like a publicly traded business, where all the value accrues to shareholders. Instead, it could be a community-owned DAO, for example, where the value accrues to a token, which I mean, it's really not so different if you compare it next to each other. But of course, the token at the moment, far less regulated, way easier to get in, don't need to be a credit investor, can be bought globally rather than US stock market, for example, and so forth.
Yeah.
You could have a different governance structure in the DAO, which could be nice, but could also, there's still a huge debate if that's actually more efficient or not. We're still working on that. Centralization of complex problems also solves problems, right? I think it's always like false to say, oh, everything decentralized is better than centralized. Not always,
exactly.
right?
Yeah.
They've come up with tons of solutions for these problems we were describing, Airbnb specifically. How do you manage it? How do you make sure nothing gets stolen? How do you make sure it's clean? All these things.
Like the whole efficiency of managing it, right? Just imagine you have that decentralized. There's such a, if you think of like DAO governance,
it's not a trivial thing. But then
it's like you compare us like a company with a CEO to the European Union, right? So like DAO's being on the European Union side.
It's not a trivial thing to solve. So, and you're going to end up with hierarchies and stuff regardless. But then there's another step to decentralizing it, where it's not just community-owned platform, but community-owned properties, right?
Mm-hmm.
Which, so now, the thing always was, oh, Airbnb is the highest valued, what is it called? Hospitality company in the world, but it doesn't own any property. But then we're kind of almost trying to go a step back. So ours would be more like Hilton, where we want to own the properties, right? But we want them to be community owned. So it's not the same. It's obviously not the same as a big hotel company that owns their own properties. I'm just trying to think through. Okay, so like that will be the ultimate thing of decentralization. The community owns the rental platform, but they also own the properties that they rent or that they are available. The benefit obviously being that all the revenues generated can be, or not revenues, but profits generated minus all the costs, could be shared back to the people investing and working in the DAO. The perk could be, just like we said before, that people could, instead of taking a yield, they could also just live in these places. So now your landlord is basically your employer, maybe.
Like a real estate investment club, where you can use the real estate.
Yeah. That essentially. So I can see this working really well, like small, where kind of everybody involved on some level.
Yeah.
Maybe it's like 10 families or 20. They know they know of each other. Maybe they're not like, they don't need to be friends or close friends or anything, but they know of each other at least. And there's a level of trust. And then I could see this actually working fairly smoothly, because so then it becomes more like a timeshare thing, isn't it? Because there's also that timeshare model, which is popular in the US, for example, but I always thought it's a scam. But I have some friends invested. Timeshare? So there's this timeshare model. So let's see. So I stayed at a hotel in New Orleans in the US, and in the lobby, this nice lady asked me if I wasn't interested in investing in buying a timeshare, right? And so the long and the short of it is, you buy timeshare, like you buy these shares in a property that's usually specific to a location, but it's not like it's one apartment, it's like a complex. And then when you want to stay in, say, Orlando, Florida, or Miami or something like that, then you have a timeshare there. That means you get maybe depending on how many shares you buy, you get to stay there, for example, 2 weeks out of the year.
Okay.
The downside is, as I understood it, as an investor in this, you're still liable for a lot of the costs that these properties incur, but of course not by yourself, but with all the other timeshare holders. So for example, property taxes in Florida, you still have to pay your share of. And I think cleaning and maintenance also. So like, even if you don't stay there, there's still going to be other fees to pay. So I was like, so what am I exactly buying if I'm still liable for all those costs? Like, it sounds like a great deal for whoever's selling me the shares. Doesn't sound like a very good deal for the people buying them, but
It's like a
but
Ponzi,
then yeah, but then some people, like, so I have a friend who's like super pro and he's like, no, it's the best thing ever. So we didn't use it for 2 years, and then we were able to exchange our shares and like stay 4 days over New Year's Eve like at a property really close to Disney World, right? And I'm like, that's super cool. And that, but let's do the math really quick. Like,
yeah, exactly.
but
How much you pay for this thing?
yeah, you bought like, I don't know, a $50,000 timeshare. During the years, you're still liable for all the costs, which is maybe, let's say, $5,000 a year or something. And then you went and stayed for a short week near Disney World, which would have probably cost, if you had just rented it, maybe, I don't know, let's say crazy expensive, maybe $3,000 a night, let's say, right? And you stayed there for 5 nights. So it's 15 grand. So like, I feel like you kind of could have gotten a better deal just staying there, you know? but maybe, so I've obviously not invested in timeshare. I'd never fully understood it. The nice lady in the lobby in New Orleans, I told her politely that I was not interested and walked away. But maybe, but there's probably information that I'm missing, and I'm sure there's timeshare models that are super fair and that work out very well for the investors. But for me, so far, it's always seemed kind of like somebody's making money off of me, but I'm not the one.
So the concept is like, get a voucher, and you can then apply that voucher to stay somewhere.
Yeah, because typically
there's a pool of properties you can stay at.
Yes, but then there's of course also like levels to them. So there's simpler places that you get more credit with, and there's more sophisticated, more expensive, bigger, fancier locations and stuff where you get less. The thing that gets me is so like basically you're buying into the club and you get certain credits per year for it.
Yeah.
But then it seems like there's still pretty high annual costs. So that's why I'm like, I feel like if you just, I don't know, if you just if you have the opportunity to invest this money that you would otherwise spend on a timeshare and earn yield on it, you would be in much better shape just going and renting short term rather than owning this timeshare, because the timeshare will never really pay you anything back, right? It's only going to cost you money.
Yeah.
So that's
I think like this whole community owned Nomad thing, I think only works if you own a place and you would sort of like pool that up with other people. But then in that case, if you owned a place and you would rent it out as an Airbnb, you can take that income that you get from Airbnb and just spend it on Airbnb as well. So, and if that's the case, then Airbnb it's not expensive, right? Paying $200 a night. If you're getting $200 a night for the price you're renting out, then it's not much anymore, right? But that means you have to own a place in the first place. Yeah,
that's right. Because if you're renting yourself at the moment, then you usually can't sublet it, right?
Yeah. You're usually not allowed. I mean, like in my contract here, I'm not allowed to sublet it. Yeah.
Interesting. Yeah. Cool.
Yeah. I don't know. I really think it's a super cool idea. And maybe you could even piggyback on the places that are empty anyway, and you can sublet them. I don't know, but then the question becomes like, why are they empty in the first place, right? Do the people don't need the money, so they don't have to sublet them? They're just going to leave them empty because they want to.
I don't know. Yeah. Well, so when we were visiting Dallas, Texas, earlier this year, we stayed at an Airbnb in a big apartment complex. And so apparently whoever is managing that Airbnb made a deal with that apartment complex, because I think they had several units in that complex. And I was wondering what like the motivation is for the complex to do that rather than just getting, regular long-term renters in there. But then I thought, well, you have a lot of fluctuation in big cities where people come and stay short-term while looking also for a place, right? So I would assume if the complex is big enough, it makes sense to have Airbnbers come in and out, because a lot of them will probably then just stop by the leasing office and say, hey, you got anything available? Your place is nice.
Yeah.
And then they can't stay in the same unit, but they could, get the one across the hall or something.
So they can at least stay in the same place. Yeah.
Yeah. So I assume that's probably good advertisement. For the same reason why, at least in Germany, car companies give taxi drivers pretty good deals usually, because it's the best way to get somebody into the car, right? And then once you're sitting in the back of this nice BMW or Mercedes, and you're like, oh, I should get one.
Pretty nice car. I should get one too. Yeah. So like in summary, this whole community owned rental holiday home thing would only work if you're somehow cutting out Airbnb.
Because we need that yield, right? We need that.
Because like they're taking, I don't know how much they're taking. I've never rented out a place. I'm sure they'll take like 20%.
It's not 20, but it's 10-ish, let's say. 10, maybe 10 to 20. Yeah. But they take from both sides. So I guess in total they do take maybe 20, but it's like, I think it's for, if you're booking, it's maybe something like $5 a day or $7 a day. And if you're renting, maybe it is like 10, 12%. So in total, maybe you're right. Maybe it is about 20% of the total value.
Yeah. So then if you'd kind of pool your properties and subletting was a thing and you owned the place or something like that, and you would team up with some people. Yeah, maybe. I don't know. Maybe we could do this in Tokenomics though. Everybody who has a property could like publish that onto a community market and say, I'm not at home during that time. You can come and stay there, right? And that's the right. And then you have like a reputation system on the back of it, similar to what Airbnb does. And then the benefit would just be, because it's a community and it's relatively small, all you would need to pay for is this whole cleaning thing. And you wouldn't have to pay the 20% to Airbnb. So you get a 20% discount on staying at that place, right?
Yeah.
Because actually what I said in the beginning, it's not a zero-sum game. If you use Airbnb, it's a negative-sum game, because like at least among all the renters, because you're paying Airbnb.
Yeah, they're extracting.
You're paying them 20%. Yeah. So then, yeah, it could work if you take them out of the equation.
Yeah, I think for sure it could. For it to be convenient and not just a small community, though, I do think the DAO, or like the community that manages that, they would also have to get something, right? Because it's a lot of effort to manage this stuff, and hiring like a cleaning crew, keeping track of a schedule, all this stuff.
Yeah.
Making sure that, I don't know, that, because you're still going to need a listing of a place. Like nobody will blindly, like even if we would swap places, I would still ask you like, hey, could you do a quick video of your place? So just so at least I've seen it,
Yeah, it's big enough.
And that makes sense, right? So
yeah.
So there needs to be some stuff needs to be coordinated, right? And that always takes time, and whoever puts in the time needs to get paid. But the thing for me really is, I love being an owner of something. So how do you get from like agency to ownership in a way? So that would be the cool thing. That would be really the motivation for me, is not just swap houses with people. That's awesome. I like that. But go beyond that and somehow make it so that the community can really end up owning the properties over time. And so that, of course, also means involving outside money, right? So allowing other people to stay and rent these places so that we extract value from them to build our real estate empire.
Yeah.
Right, that would be the name of the game. But yeah, super cool.
And I think like
thinking that through.
Citadel could help with that.
Yeah, Citadel
maybe
could
we
definitely...
I can reach out and we can get them on next time or on another show in the future to hear them out on their plans for something like that, like to franchise it, because that would be really interesting if they lend out their infrastructure in purchasing real estate, tokenizing it and all that, so that DAOs could do it.
That would be phenomenal.
Yeah. I think that'd be pretty cool model. Not sure if they have this on the radar. I think that we talked about that with them, but maybe we can bring them on and discuss that with them. That'd be really cool.
Well, so this is, again, the cool thing about Web3, right? So once they've solved this problem like the legal structure and the tokenization, if then other communities can build on top of it, I mean, that's how the massive innovation can happen, right? So like another DAO could just manage, they don't have to worry about how the whole legal structure of owning the thing works. They could just focus on, hey, we're just doing short-term rentals and we're going to manage them. We're going to find the users for it, blah, blah, blah.
Yeah.
But somehow work through Citadel in the ownership piece. And then the next DAO can come along and say, oh, we're just doing car washes, right? and so forth. But it's so cool because it can just stack layers on top, right?
Yeah.
I love that.
Yeah, they can like apply for doing that sort of stuff. These roles. Yeah, interesting. Cool what this space will bring.
Alrighty, so let's wrap this up. So today we just did a brainstorm on a funky idea that we had about community-owned short-term, medium-term real estate. Tokenomics DAO overall, we're thinking through all kinds of tokenomics things in the Web3 space. You can join us on Discord. You probably already subscribed to Substack if you're listening to this. But if not, go for it. We're launching a new website soon, so stay tuned for that. Probably take a couple more weeks, but then it's out. And yeah, you can reach us anytime on Discord. There you go.
Yeah, pretty good.
Cool.
Thanks for listening.